Hello everyone, and thank you for joining us today for a discussion on first-party claims considerations during the COVID-19 pandemic. I'm Charlie Netherton, Head of Client Advisory Services at Marsh, and I'm joined today by Rob Powell, who's the Chief Claims Officer for Marsh JLT Specialty and International, Mike Russell, our Head of Non-Specialty Claims UK and Ireland, and Neil Greaves, the European Sales Leader for Claim Solutions. In today's webcast, we'll provide you with an overview and insight into the current COVID-19 claims that have been notified by our clients. We will look at some of the likely challenges to coverage before providing recommendations on how to best prepare and present a claim. Today's session is the last in our series of risk management webcasts. If you missed any of our previous sessions, please visit our events page on marsh.com/UK to view all the webcast replays and to download the slides. Here you'll find all of our current COVID-19 thought leadership offerings, solutions and advice as well. We try and make these webinars as interactive as possible. So before we start the discussion, I want to encourage the audience to submit any questions you have through the Q&A tab at the bottom of your computer screen. Questions will be covered towards the end of today's session. If we can't get to your question today, someone will get back to you as soon as possible with an answer. At this point, I'd like to hand over to Rob Powell, who's going to start today's session.
Good afternoon. Today, I'm going to provide you with an overview and some insights into the current COVID-19 claims notified by our clients. I'll use the time available today to provide you with some insight into the claim activity which we're seeing, the potential and the impact on insurers, an outline of what our clients typically expect from their insurance product, and the way forward in terms of how Marsh is assisting clients at this difficult time. So overall, we're currently managing approximately 9,000 to 10,000 claims which have been notified by clients, 70% of these relating to business interruption losses. Perhaps surprisingly, the country with the majority of notifications at this time is the UK. Now, this session is primarily focused on first-party claims because of the time and the bulk of the notifications which are being received from SME businesses under commercial package policies and under the property damage and business interruption wordings. In the beginning, the first wave of claims concerned event coverages. These are typically the claims for cancellation and or postponement of events, and they're usually made under bespoke event policies. There are some high-profile claims out there, and they include the major sporting events, music and entertainment concerts, and festivals. One of the dilemmas with that type of claim for our clients has been whether or not to cancel the events which are scheduled to take place later, perhaps in the summer, or even later in the year or next year. Let's hope not. It's not an easy decision, particularly when the early cancellation will likely cost less than deferring the decision until closer to the due date. Secondly, many businesses and education facilities had in place group travel policies. And here too, we're seeing a good number of claims resulting from the cancellation or the extra expense claims for extended stay abroad, transport and repatriation costs. As I mentioned earlier, by far the greatest number of claims fall into the business interruption category, which is bifurcated as a product falling into two areas: property damage coverages and non-damage coverages. In the first case, to trigger a business interruption claim, you would need to prove that there has been physical damage, i.e. the virus has to be at the premises and has caused physical damage. As for the non-damage coverages, these could be pandemic specific or other policy extensions, including denial of access, infectious diseases, and loss of attraction. What I see as the second wave of claims would be the third-party claims, where clients perhaps fail in their duty of care to employees, customers, visitors, etc. We're now seeing precautionary notifications where business owners are concerned that they may receive claims from both employees and third parties. Closely followed, I would anticipate trade credit claims in the coming weeks. As the global economic crisis deepens and companies struggle to meet loans, we should expect an uptick in trade credit claims for insolvency and debt default. Finally, it follows that directors' and officers' liability claims will arise. It seems highly likely that with the fall of global equity values, shareholders will look to apportion blame and look to companies who have not expressly mentioned the effect of coronavirus in their financial statements. This class of business is probably going to see a sharp rise in D&O notifications. At this time, of course, it's too early to tell how significant they will be. It now seems likely that COVID-19 represents a major exposure for insurers and reinsurers. Coverage may be uncertain to many types of claim, particularly business interruption. But if you consider the number of other exposures, perhaps liability to pay the claims for employers' liability, workers' compensation, etc., for first responders, care homes, etc., the trade credit and D&O claims, then the big picture to carriers could be very significant. There are many estimates being bandied around right now, but if we just take the top 4 of those published, Dowling, Citigroup, Lloyd's, and UBS, we have a possible range of between $37 and $67 billion. I've even heard it said by one carrier that they are estimating exposures based on an insured market event of $100 billion. To put these numbers in context, the largest insured catastrophe event recorded is Hurricane Katrina back in 2005. That was just over $80 billion. So COVID-19 certainly may have the potential to be up there as one of the largest or even the largest insured event of all time. Our customers look to us to provide advice and support on claim submissions. In terms of the potential third-party claims, this is far from straightforward, as usually you need to provide the insurer with detail, the specific breach of the duty of care, the nature of the possible exposure, or the potential claim. There is a good deal of press and social media comment globally on how insurance is responding or likely to respond, and they're looking to insurers for certainty on how their product works, and of course to Marsh for some guidance. And let's of course remember that this is a career-defining moment perhaps for the insurance buyer. Where there is coverage, our clients expect early funding by way of interim and advance payments. We all know how cash flow is a huge problem for most businesses right now. And in the cases of denial, our clients are receiving quite lengthy and complex letters from their insurers articulating why a claim is excluded. Here too, they need the assistance to understand exactly why the policy is not responding, and to what, in many cases, they felt the reason why they purchased business interruption in the first place. Where there is a claim, most of our clients want to know how to quantify and submit claims. They don't want to waste time and money preparing and documenting a loss, which simply isn't covered. Quantifying the COVID-19 loss will be a complex matter, and settling most claims will be far from straightforward. As we turn to the way forward, this COVID-19 pandemic is likely to be a defining and a sobering moment for all of the market. Marsh is helping clients through the claim process and advocating on their behalf. There are a number of areas where we are specifically focusing. Communicating effectively and transparency is vital. We want to make it as simple as possible by recommending a clear claim submission and seeking early confirmation from the carriers as to whether there is coverage or not. These decisions are sensitive, and relaying the information in plain language is so important. Clients will need to understand exactly why claims are being denied or what the claims adjustment process entails. Communicating decisions, next steps, and strategy are the areas where many of our clients need the most help and guidance. As always, having access to the decision makers is so important, and in our experience, most carriers are already aware of this and are making sure that their key contacts are being published and made available to us. It helps immensely. It ensures that we can convey our clients' points to carriers at every level, and we can escalate issues and seek quicker decision making. We should also remember that when policies are placed, Underwriters are always keen to make prospects aware of their claim statements, particularly their promise to pay. My sense is that retention rates will be linked to how we all perform as an insurance market, as a partnership, all of us together in this pandemic. How we respond will be a testament to how the entire distribution chain works in practice. It is perhaps to be seen as an opportunity to deliver. Thank you very much for listening. I am now going to hand you over to my colleague, Mike Russell, to talk about the challenges.
Thanks, Rob. So just to go through some of those challenges as we see, I think the first point to make is that there's a lot of coverage issues being encountered as a result of the COVID-19 situation. We've used this term a lot, but it still feels like it's the correct term. It's unprecedented in terms of what we've seen. And despite many weeks into the crisis, the coverage still remains uncertain for the majority of clients. Why is that? Well, in the main, that's because insurers are taking their time to investigate all angles prior to advancing a view. And of course, as Rob said earlier, if you look at the potential size of the insured event, you can understand why insurers are taking their time to look at this. What we're beginning to see over the last week or so is some clarity and some certainty on certain cases, but in the main, that's on the clear-cut denial cases. So cases where insurers are very certain that their policies aren't providing coverage. They're beginning now to issue declinatures on those. The more grey areas, the more complex claims, and the areas where policyholders are looking for coverage, in the main, insurers are still holding back their views at the moment whilst they qualify exactly what the claims are, what the triggers are, and work out what they want to do next. At Marsh, we're constantly reviewing this situation, and we're in daily dialogue with all of the main insurers at senior levels throughout their organisation, both inside the claims practice and outside. We're talking to the regulator, the FCA, and we're advocating on behalf of our clients where that's the correct thing to do and where applicable. Many of you will have seen last week, the FCA announced that it decided to take some action to issue declaratory proceedings through the courts on key wording issues. And they were doing this to bring certainty for policyholders and the industry. Again, this is uncharted waters. We've not seen this before. The FCA have embarked on a short consultation period ending on the 15th of May. And then we'll find out exactly how they intend to take this forward. But certainly from a client perspective, we could see why many clients would see this as a positive development because it's solely aimed at providing some certainty. If we look at the coverage position and the considerations there, broadly at this moment, we can give you the following views. So if we look at number one, property damage. Remember, as Rob said, the vast majority of business interruption policies are written on the basis that damage to property is the key for a business interruption loss. So trigger number one, there has to be damage. In the US, there's case law that talks about the presence of a contaminant constituting property damage. As a result, many US insurers over the years have put various other exclusions into their policies around virus and other contaminants, etc. In the UK, the position is slightly different. In the UK, it appears when we look at the case law that to constitute damage, there needs to be some form of molecular change to occur in order to actually trigger the damage test. So a slightly different position from in the US. And I think, as with many cases that we look at coming out of the COVID situation, this could well be an area that needs further clarity in the UK courts. The sort of pragmatic approach to this, though, is that in the main, if you did have a premise that actually could evidence that it had a COVID exposure and that you'd got through the property damage test, in the main, it's likely to be quite a short-lived business interruption period, closing for some deep cleansing and then reopening. So whilst there's a lot of focus around property damage, the effect is really quite small. If we go through some of the other triggers, government action comes up quite a lot. So in many countries, governments have, of course, taken action to close businesses and large-scale events have been cancelled. For event cancellation coverages, the cancelling of the event itself is usually sufficient to trigger the coverage. But as Rob was alluding to previously, there are complex considerations for event organisers around how and when to actually issue the cancellation of the event. And clearly insurers will want quite a bit of input into that. Looking at the next category, infectious disease or contagious disease, many policies will have a disease extension. Now, usually in the UK, they're written in one of two ways. A prescriptive list of specified diseases. So that's where the insurer is saying, I will provide certain cover, depending upon other triggers, for a particular group of diseases that they've named. And not surprisingly, COVID-19 doesn't appear in that list because, of course, it didn't exist at the time that these lists were produced. There's then a second way that many policies are written, which is covering notifiable diseases. And the trigger there and the list of diseases there is basically any disease that becomes notifiable to the government authority. So that list changes over time. And as we know, for England and Wales, COVID-19 was added to that list on the 5th of March 2020. Now, regardless of which basis the extension is written on, there's always a secondary requirement which requires the disease to have occurred either actually at the premises or within a vicinity to the premises, which, depending upon the policy, could be 1 mile, 25 miles. We've even seen some policies written at 50 miles, or a broad impact. So in other words, not actually coming up with the exact distance, but having a broader impact. And I'll cover some of that slightly later on. The next area is prevention of access. Now, this usually requires damage to the insured property or other property, again, within the vicinity or that mileage route that we spoke about before. For example, a fire at the end of the street necessitating cordoning off and preventing access to the insured property. Some policies also contain non-damage prevention of access, usually linked to some of those other categories I mentioned before. So usually linked to either disease or a government or local authority closure. And quite often there are requirements around there has to be an emergency or in danger to life. So just looking at some of the other issues that come up, again, we often talk about occurrence at the premises. So many policies require damage or the disease to have actually occurred at the premises. Now, what I was saying earlier about triggering property damage in the UK, that seems quite a hurdle at the moment. But the reality is we'll have to wait and see where the courts get to with this. There is an argument that COVID is so widespread, then who's to say it was or was not actually at my premises? So again, we're likely to see further developments around that. Looking positively for one moment, in terms of once triggering cover and getting into the cover, then the question becomes around limits. An awful lot of cover that we see in policies has specific inner limits for prevention of access or notifiable disease. And often the question is, if you've got multiple limits, can you stack those? So one limit for prevention of access and another limit for disease. The answer really there is, in the absence of any specific wording in the policy, and often there is specific wording preventing the stacking, but in the absence of any specific wording, then yes, you would be able to stack the limits in most cases. And that can be quite important because for some clients, they have premises and businesses across multiple jurisdictions. And we know if we look at one of those triggers, government lockdown, that lockdowns occurred in Italy, Spain, France, and the UK, to name but a few, all at different times and as a result of different independent governments issuing different legislation. So it could well be that people begin to look at multiple limit claims around different triggers. Now, I mentioned vicinity before, and I said I'd give a bit more detail on it. Vicinity is important for both non-damage BI extensions, so both prevention of access and disease. And as I said earlier, the wordings can vary, typically from 1 mile to 50 miles, or a very broad definition of an area that's likely to affect or impact the premises. The main issue perhaps to consider though is whether the reason for business closure is due to COVID existing within that geographical circle, regardless of how small or how wide that's drawn. Or alternatively, whether, as insurers are beginning to suggest, is a result of a global pandemic and government action to halt the spread of the disease, regardless of whether or not it was within or outside the actual local circle. Probably worth bearing in mind, though, that at 25 miles, which is a very common wording, that produces a 50-mile circumference, which would certainly be enough to encircle Greater London and its population of 9 million people. So if the matter does become before the courts, they'll have to consider very carefully the geographical area and whether that truly can be interpreted as wanting to provide very localized cover or trigger or something much wider. Now, talking of wider, the wide area damage test, or the but-for test, as it's often known, has got a lot of press over the years. And just in terms of recap, that's mainly as a result of a case for Orient Hotels, which came from the last largest insured event, Hotel Katrina. Now, just to recap, that was a hotel that was damaged by the Hurricane Katrina. Insurers advanced a case that regardless of the damage to the hotel that had been caused by the hurricane, as the entire state had been decimated and a large-scale evacuation had taken place, the hotel would not have been able to trade for business in any event. And crucially, that would have been the case even if it had not been damaged. Now, insurers won this argument at arbitration. The policyholder appealed, and they lost on narrow facts, but they were given further leave to appeal. Now, subsequently, the two parties came to an out-of-court settlement. And so we never got the true answer around this case. Now, ever since that case, whenever there's been a large-scale event, people have talked about Orient Hotels as being a precedent, and it's got quite an infamy around it. But the fact is, it's not a precedent case in the usual legal sense of the word. So the question really is, will this principle reduce or extinguish COVID-19 claims recovery on the basis that businesses would have been affected regardless of the occurrence at the premises or within that vicinity? Now, it remains to be seen whether the COVID crisis here will create some legal action which perhaps decides the issue of wide area damage finally. And we'll have to watch as matters develop there. So I hope that's been useful for everybody in terms of the coverage hurdles. I'm going to hand over to Neil Greaves now, who's going to examine claims preparation and practical advice.
Thanks very much, Mike, and good afternoon, everyone. From a preparation and validation perspective, business interruption has been the major focus of policyholders thus far. Now, as Mike observed, many claims have been notified under BI policies, but in most cases, insurers have delayed a definitive response on coverage. So what do policyholders do in this situation? Do you sit and wait? And the answer, in our opinion, is not to sit and wait, but to begin work on quantifying claims at this relatively early stage. So we're working with a number of clients to understand the financial impacts on their businesses, to model the impacts, and to prepare and present preliminary claims for submission to insurers. Now, of course, no one knows how long this will go on for or what the ultimate financial impact will be. So these are provisional claims and are caveated as such. It is, however, helpful in terms of encouraging a definitive response from insurers. It's proactive. We think it puts clients on the front foot, and it expedites the process. If a loss adjuster or a forensic accountant gets appointed, there is something definitive for them to review. So as Mike referenced earlier, some claims are triggered by damage, and we expect most of the damage triggered claims to be relatively short in duration and therefore relatively small in quantum. That's not always the case, but we think in most instances, damage-related claims will be for relatively short periods of time, commensurate with cleaning of a premises, etc. Most of the claims that have been notified, therefore, are under non-damage extensions, which potentially give rise to longer periods of indemnity and enable insured policyholders to recover higher losses. So what challenges do we expect around quantification of claims? Well, first of all, I think losses must flow from the particular policy trigger. So if a claim is being submitted, say, based on a denial of access extension, insurers will be looking to quantify losses that flow from that specific trigger, i.e. perhaps an inability to access the premises, rather than the wider impact of the pandemic on the policyholder's customer base. And that does bring us into the question of wider area damage that Mike's just spoken to. Most business interruption policies have what we would call an all other circumstances clause or a trends clause. And this enables the policyholder to build a trend into the claim to reflect any particular circumstances that are going to influence performance. So a policy may refer to prior year as a kind of standard benchmark for calculating the loss, but then the all other circumstances clause does enable you to build in appropriate trends. And in some circumstances, that's a very helpful clause. If, for instance, there's a new account that a customer's won, or there's new business that's come in subsequent to the prior year performance. But in the case of COVID-19, it could have a negative impact on claims, in that, as Mike alluded to, insurers may take the view that, but for the particular coverage trigger of denial of access or notifiable disease, the wider impact of the pandemic would have had an impact on the business anyway, and therefore the impact of the policy trigger is minimised. So that's something that hasn't been or reached any definitive conclusion yet, but it's something that we're very conscious of. So to summarise, in terms of quantification, presentation of claims, we do expect numerous issues, and we do expect challenges. And I think in terms of submitting claims now, we're trying to take these numerous factors into account and ensure that we prepare and present claims in the most appropriate, robust and sustainable way. So our recommended next steps, first and foremost, is to establish whether there's been an impact on the policyholder business, and if there has, to notify a claim as soon as possible. Secondly, do not delay quantification, but begin the process of modelling the claim in order to make an initial submission to insurers and further the claim discussion around policy response. And finally, we're working with clients to drive these claims forward. Obviously, there is substantial activity, and the key thing here is to make submissions to insurers as soon as possible and to commence dialogue around quantification, interim funding, and indeed fundamental kind of coverage points. So with that, I'd just like to pass back now to Charlie.
Thanks very much, Neil, and thank you also to Rob and Mike. That concludes the main part of our presentation today, but now let's turn our attention to some of the questions that we've received from the audience as they've come in. So first question's for Rob Powell. How does Marsh manage claims communications with insurers, Rob?
Well, that's a good question. So we're aligned at every level with insurers. You know, one of the best things about our organization is that, you know, we can align pretty much with with everyone in every organization. So we've always got someone to talk to them. So we start with the claim handlers, and they talk normal practitioner level to practitioner. Then we escalate to managers of the products or product leaders. We also have regular global interactions and regional catch-up calls with chief claims officers of each carrier and counterparts. So a lot has been achieved in recent years to change really how we communicate with the insurers. So we need to be far more proactive. So we're all looking at claims as being a differentiator, as they are too. And this has meant that the carriers and the brokers have developed better ways to communicate, so we can monitor performance and share best practices. And right now, of course, we're in touch every day talking about their position on exclusion language or acceptance language, so we can look at best practice and also how they're complying with the relevant Insurance Act and governance structures.
And how well is all of that working while everyone's working from home?
I have to be honest, I think it's working better, Charlie, actually. You know, one of the best things, I suppose, is we've all learned to use Zoom far more than we ever did before. So rather than wait to communicate or meet people and walk around London and the other offices in the UK and, you know, wait your turn, etc. Now we have pretty much seamless access to talk about COVID claims. You know, I'm talking to the senior claims leaders at every carrier pretty much every day. And, you know, we're doing it through Zoom or even WhatsApp, even with quick questions. So, yeah, I think it's extremely good, very good.
Thanks very much, Rob. So, Mike, we've got a question here. Many commentators are stating that policies don't provide cover for global pandemics. Is there a specific exclusion here?
Yeah, you're right. I mean, there is a lot of talk about that. And interestingly, certainly for the vast majority of UK policies, there is no specific global pandemic exclusion. We've seen that wording crop up a little bit in continental Europe, but certainly not in the UK. So when we hear people saying my policy or an insurer's position that their policy doesn't cover the global pandemic, it's not because there's a specific exclusion on the wording. What they're doing is they're reading and interpreting their own wording and drawing an inference from that based on the way that they've crafted the wording to positively provide certain cover, but also looking at what their underwriter's intention was to get to a statement that says our policy does not cover global pandemic. It's not because of a specific exclusion.
Okay, no, thank you. That's helpful. One coming in, I think it might be for Mike, might be for Neil. Maybe we'll ask Neil to have a go at this first, and Mike to add anything on top. If we have a valid claim, how do we quantify the business impact, and what level of support will insurers require to support a business interruption claim?
Yeah, I think that's a good question. I mean, what we're doing, or what we're seeing at the moment, is many clients are looking to quantify losses at this stage on a relatively high level basis. Obviously, we're not at the end of the period of disruption or interruption at the moment, so it won't be possible to quantify claims in their entirety until further down the line. And I think what we would say at this stage is do the basics, which is to track costs that are incurred, to collect information, to collect data. But then in terms of an initial measurement of loss, it will be a projected claim. And we're working with many clients to project the claims on a relatively high level basis at this stage. So using some key data sets like pre-COVID budgets and current forecasts. And we're projecting the claim forward as a preliminary assessment of loss, and we're caveating it as such. And I think, you know, that kind of model is being well received by insurers too, who would like to get an overview of their exposure, and that will lead to the detailed quantification and detailed requests for additional data, I think, at a later point in time.
Thank you, Neil. Is that Mike? Anything you want to add on top of that?
No, I think that deals with that. Just to echo that the main thing we're trying to stress to all clients is when you've submitted a claim, let's do that quantification work to actually demonstrate to your carrier exactly what your losses are and where they're coming from. So a crucial piece of work if you want to get the claim into the positive coverage discussions that we hope to have.
Yes, thanks, Mike. I've got one more for you here. Just a question, Mike, about the Marsh resilience wording, with the caveat that you're the claims expert rather than the policy wordings expert, and we might need to defer to the relevant broking team. To what extent can BI claims be made for lost revenues, profits on a prior year or trends basis, assuming that reasonable mitigating actions have been taken by the insured? And how will insurers approach this?
That's a very good question, and it's certainly one of the areas that we will have to spend a lot of time on all claims actually looking at, because as we alluded both in Neil's session and my session around wide area damage, all policies contain a trend clause which allows you to take the trend of the business from the prior year and extrapolate that forward to get you into the correct settlement process. The issue that we will be facing with COVID, and it's not unique to COVID, but certainly getting far more discussion, is what business would you have done in this year given what's going on? And so clearly that's going to be a key area for discussion around the trend clause, and one that has yet to be resolved with insurers in terms of the stance that will be taken. In the past in the UK, when we've had large flooding events, this issue has come up. But it tends to be in a relatively localized area. And so once the issue has come up, it's usually then fallen away. And as I was saying around the Orient Hotels case, it's not a precedent case. So we'll have to see. But certainly we would be preparing claims with Neil's team on the basis of the business that we were expecting to do in the year of 2020, rather than taking any other considerations into account, and then advocating that with insurers.
Thank you, Mike. Maybe a question for you and for Rob. Have any insurers confirmed COVID-19 cover yet? Or are we just saying that no insurers have done this yet, only sent to clinicians? What's the position to date?
Yes, is the short answer. So yeah, carriers are looking at each claim, which they have to do. They have to act in good faith. So look, they're looking at individual circumstances. But certain claims are being accepted. We're seeing quite a lot of progress on travel policies, event cancellation claims. On the business interruption claims, we have seen some denials, and some of these have been quite high profile and are widely reported in the press. But for the majority of claims, the insurers are still reviewing the facts. We're working with them daily, presenting the claims, talking to them about how they should and will respond. But in the meantime, in respect of these denials, we're engaging with them. We're trying to understand their position and communicating with clients. But certainly there are claims that are being paid, and in fact, many examples of business interruption claims also.
Yeah, no, thank you for that, Rob. A question actually also for Rob to bring you back about asking, are there any ways in which third parties may make claims on through D&O insurance?
Yeah, so as I mentioned earlier on, Charlie, I think, of the potential 3 waves of claims, we start with the BI property claims and then move on. But really D&O probably comes at the end. And the answer to that is, in my view, for sure. There will be a lot of D&O activity. You'll have to prove, of course, or at least the claimants will have to prove that there was a breach of duty of care, and that they were owed a duty of care, and that because of the lack of action, which is probably more likely to be the case by the directors or officers of that company, that they have suffered a loss. So right now we've seen quite a few claims. The majority, which probably is no surprise, are starting to come in from the United States, which clearly you probably would expect. But I think they'll pick up here too in the UK.
That's helpful. Thanks. So here's a question for Mike and for Neil. What type of claims related to coronavirus are we actually seeing, and how are our claims teams currently supporting clients on those?
Do you want me to take that one then? So we're seeing, as Rob said, the bulk of the claims are business interruption, with also a significant chunk of travel claims. In terms of how we're helping clients with those, certainly in relation to the business interruption claims, because of the complex situation around that, we are assigning a senior claims person to each one of those claims to have a discussion day one with the client around how they've been impacted, and we look at the policy wording and we talk through the issues with our clients around that. What we're then doing, if the client agrees, is notifying the claim in the first instance, very high level, into the carriers to get the process moving, and really pushing the carriers along where we can to look at the claim, to ask further questions and information, maybe appoint a loss adjuster. And then in tandem to that, as Neil was saying, working with our clients where applicable to try and prepare the claim at a high level to get some sense as to the exact quantification, to create some type of preliminary model that we can then use to discuss through with insurers, and then basically just keeping in touch with the process throughout to get to a position where we've got some more certainty for clients around coverage for each individual claim. I don't know whether, Neil, you wanted to add anything around
that. Nothing specific on that point, Mike. I mean, whether this is just an appropriate time to mention non-COVID claims and the fact that claims that occurred prior to COVID are likely to be influenced by COVID, particularly in terms of the all other circumstances clause and delay in reinstatement of property. So I know we're focusing here on the impact on COVID claims, but it's possibly just worth flagging that, we expect some of these issues to also be raised on non-COVID claims, and possibly all of the circumstances clause for a point to be raised about, well, had you reinstated your property by the 31st of March, you actually wouldn't have been able to trade because of COVID, and that's a totally separate cause. So it could impact an existing claim as well. So, that sometimes gets a bit lost when we're focusing on COVID impact, but that's something that we do need to bear in mind when we're working with clients on existing claims as well.
Thanks, Neil. So, Mike, I'm going to switch tack here. I've got a specific question on travel cancellation claims. I know that you've been looking at a lot of these recently. One of our listeners has been talking about the dreaded cycle where travel providers are pushing claimants to insurers, and insurers are referring them back to the travel providers to reimburse costs. What's the market appetite here to think about processing cancellation claims and subsequently subrogating? And is there anything else the industry can do here?
Well, I think it's certainly an issue. We're certainly seeing it more so on the sort of personal lines travel claims rather than the corporate thus far, but I think it will bleed in. I was actually talking to a UK head of claims of one of the main carriers this morning about this issue, because there's a couple of things that's happening. Number one, travel claims was the first area to spike in terms of claims for COVID. So a lot of the main travel insurers have got a little bit behind in dealing with claims, so that's causing some issues. But then number two, there is this vicious cycle of, have you sustained a loss? Can you claim under the tour operator cover first? And we're trying to work through with some carriers more of a staged approach in what they do. So it's obviously correct that they should be asking those questions. And if there is a recourse, but fundamentally there's also an insurance product there for which a premium has been paid. So the two need to balance out, and I certainly wouldn't expect any of our clients to be left between two stools for a year waiting for those things to be worked through. So we haven't seen too much negativity on the commercial side of that yet. It's mainly been what we've read in the press around some personal lines conundrums, but we are monitoring it very closely.
Thank you. And then one final question I think we've got time for today, maybe back to Neil. So clearly, Neil, your team is made up of expertise from across the former loss adjusting and forensic accounting spectrum. But somebody here is asking, on the insurer side, are they appointing forensic accountants through their loss adjusting teams to look at the quantum of impact as well?
Thanks, Charlie. I think the answer to that is yes. We are seeing forensic accountants appointed by insurers, either independent forensic accountants or the in-house forensic accounting capability in the loss adjusting firms. I think the only question that comes about on some claims is whether policyholders will be able to demonstrate that their loss is significantly in excess of a policy limit, and therefore may not require the level of intense scrutiny that a normal business interruption claim would get. So I think in some cases, if the loss is likely to break through a policy limit, it may be that insurers and their advisors will adopt a pragmatic approach to quantification. But at this early stage, it's difficult to see whether that will happen, and if so, in how many cases. And I think, it's fair to say that we are seeing appointments of forensic accountants on many of these losses.
Thank you. And then just a follow-up to that. So for our clients, if they do have a valid claim, how do they quantify the business impact, and what level of support are insurers actually asking for to support that claim?
Yeah, ordinarily on business interruption claims, it's quite common for forensic accountants acting for insurers or for adjusters to issue quite lengthy document request lists seeking information in support of the claim. And we think that will be a feature of COVID claims, that there will be quite detailed requests for support and for additional data and documentation. What we are saying to clients at this stage is begin collecting that data and that information, but let's go with initial submissions based on some key data sets, as I mentioned earlier, which facilitates a relatively quick submission of claim, but be prepared for the need to quantify these claims on a detailed basis, and the need to kind of support both costs that are incurred and losses that are sustained, possibly with some quite detailed information relating to, existing customer cancellations, postponements, and kind of customer behaviour.
Neil, Mike, Rob, thank you very much for participating in today's discussion. That's all the time we've got today. And thank you very much also to everyone who's joined us today. We appreciate you taking time out of your busy days to join us. We'll be sending out a replay to all of those who registered and attended. Please don't hesitate to reach out to your Marsh representative for any questions or concerns you may have as you continue to manage the impacts of the pandemic. For more information and resources to aid you in your response to the current outbreak, please visit our COVID-19 resource hub, which is on marsh.com/UK. Here you'll find all of our current thought leadership offerings, solutions and advice. You can also stay up to date on Marsh News by following Marsh Global on Twitter and following us on LinkedIn. Thank you again for joining us today, and stay safe.